Let's talk to Tim Gregory. He's an investment manager at Vermeer Investment Management. Very good morning to you, young Tim.
Morning, Nick.
Right, US result season in progress. Good, bad, or indifferent?
Well, expectations going into the results season were that it was going to be a great season.
Yep.
You know, we knew that forecasts were for growth of around 20% in earnings, so that was a big ask. And it's not that that's not being achieved, but what has clearly impacted markets continuously this week has been the reaction to certain results. So, you know, Caterpillar had extremely good results, quite a confident outlook statement, but came on a day where the market's mindset was this is as good as it gets. There are trade fears and worries going forward, and the stock fell 8% on the day, despite, you know, pretty robust performance. And then, you know, subsequent to that, you know, Wednesday night were great results from Microsoft. The stock did rally on Thursday, but when Amazon modestly and Google modestly disappointed on Thursday night, that put the sort of FANG trade back under pressure. And, you know, we've seen, you know, that continue to be the case. So it's been a really up and down season. Results, you know, have been pretty good, but where companies have had high expectations and not quite been able to achieve them, in some cases the penalty for that has been very penal. But I mean, the reverse of that actually was interesting, because obviously we've had these very poor days, and then yesterday there was a couple of stocks where shares have been terrible into results, and expectations were clearly that another profit warning and a very poor statement was coming. So Under Armour had results that were not as bad as feared. Shares were up 27% on the day. Right. And Vulcan Materials, which is an aggregates business that was one of the stars of, and it's an interesting point actually, the stars of the original Trump trade. So when President Trump was first elected, bank stocks, industrial stocks did really well. Expectations of massive infrastructure projects, which were bipartisan, agreed by both parties going into the election. Well, at their peak, Vulcan, I think, traded above $140. Yesterday, into the results, they were $85, and they had quite good results, and they closed the day at $98.
Wow.
So we're seeing enormous volatility, but it illustrates the point, actually. You know, President Trump has been very vocal about the success of the stock market in his presidency. But actually, a lot of the trade that did very well in his early presidency has unravelled very badly. Right. And so, you know, I think it's interesting. He's, you know, tweeting about the stock market and so on and so forth. And, you know, it makes me think that, you know, for all everybody saying that the Chinese desperately will need to do a deal and they're backed up to the wall and they've got to do something to get out of these, you know, trade penalties, I think it's important for both sides now to get a deal. Because these results, you know, where people have talked about trade and the impact of that, it's made people worry about next year. Because in the end, the stock market's all about the future. We knew this was going to be a great results season. Yep. What counts is 2019 and beyond.
Yep. Okay, we talked about Mr. Trump. What about these trade wars?
Well,
this is actually ratcheting up, isn't it?
Well, that's, you know, and that's the point, isn't it? So if we're going to move, because no deal can be done, from 10 to 25 or more goods, that clearly is going to be difficult for markets to overcome that. But, you know, suddenly some of the noises have been, sure we can get a good deal done, and they're going to meet after the midterms and so on and so forth. So, you know, the importance of a deal is significantly increasing. And as I say, I think it's to both sides. Because if you think back a number of months, in the early stages of the rhetoric between both sides, the US stock market continued to do really well despite concerns about trade wars, while the Chinese market was doing really badly. That's changed. So, you know, I think, you know, the way the market was behaving was emboldening the president and his office to believe that they were winning and were doing really well, and the stock market was responding in kind. That's not the case anymore. And that might make them give pause, given how important the stock market has been to this president. Right. And what he said, you know, during the first 2 years, given how well the stock market had been doing until recently. Right.
You touched upon the midterm elections. How important is that to the stock market?
It can be very important, and quite frankly, you know, your guess is as good as mine what the result of those elections will be, because as we know, polling data has been notoriously
unreliable.
Correct. So, we'll just have to wait and see. And, the question will be, does it make the last 2 years of this term more difficult in terms of getting policy through? But remember that trade is one thing that can be done by executive order.
Right.
So even if the Democrats did much better,
yep,
the president will still have the decisions on trade.
Right.
So, as I said, it continues to be very important for all sides now that a deal is done.
Okay. And finally, in terms of global equities, FTSE 100, obviously been a bit of a dog with fleas, rallying back the last few days. Buy, sell or hold into Christmas?
Well, the big driver for the UK market has been Brexit and the uncertainty caused by that. And of course, the irony is that when concerns over a hard Brexit deal are most of the fall, the pound is very weak. And so all the components of the UK stock market that are perceived to be defensive, companies like Unilever and companies like that, and also very geared towards foreign currency,
yep,
and therefore their profits rise if the pound goes down, tends to be that the market does better when the pound is weak. So, the whole how Brexit plays out over the next few months will be very decisive in determining, because I think it's affected foreign investment into the UK market because of uncertainty.
Yep.
It has definitely been affected. There are a lot of cheap shares now in the UK market, and you only had to look at the excellent results that BP produced yesterday to highlight the attraction of individual companies with strong dividend yields, and a point that Malcolm Gregory and I have made on the show in the past about how oil companies have reduced their break-evens, and even with a lower oil price, we're starting to be very cash generative, and with the higher oil price that we've seen, been able to produce really good results like BP did yesterday, like Equinor did last week, and hopefully the likes of Chevron and Exxon will follow suit when they report tomorrow.
Morgan Stanley wrote a report, didn't they, that the FTSE historically is very, very cheap at this point, one of the cheapest points since the Second World War. But obviously sentiment's been not great.
Absolutely.
But when do the buyers come piling back in? Is it once Theresa May says we're 100% done as opposed to 95% done?
Well, there's quite simply, there are just two sides to the UK market. When country voted for Brexit, on the day, the stock market fell heavily. But if you remember, because the pound fell heavily, by the end of the day, defensive equities with a very heavily foreign currency bias, like Unilever, their shares were up. UK domestic economy stocks were slaughtered.
Yep.
And if a deal is done and we can get past the current fears of a hard Brexit and what that will do to the economy, whatever that might actually turn out to be, because we've had all the doomsters in the past which weren't right initially. If we can get past that, then those domestic stocks that have done really badly for the last couple of years could be due a very big rally.
Yep.
But it's a big if until you know the certainty of that.
But again, as a fund manager, somebody managing the money, okay, do you try and predict what's going to happen on that, or is it just so uncertain that you can't say I'm going to go massively long?
No. We wouldn't do that. I mean, we just think we would rather miss an initial rebound to be confident that the pound was going to sustainably do better and that the UK economy was going to perform better than it has been doing over the. It's because it could be a binary outcome. We just simply don't know, and we run a global fund. The UK is not an enormous percentage of the global benchmark. The companies that we tend to own are companies like Rio Tinto, Standard Chartered, Glaxo, companies like that, which have very limited exposure to the UK economy. And because of the uncertainty of the UK economy, we've just kept on the sidelines because we don't want to make that bet until we have greater clarity.
On that note, Tim, we've run out of time. Thank you very much.
Thanks very much.